Hi, this is Jack Bevere at the Dominion Group. We are a real estate investment firm and we specialize in single-family residential properties. Everyone's certainly aware of the foreclosure crisis that's gone on for the past number of years in the United States, and that there are bargains to be had purchasing distressed properties, mostly from banks. That being said, putting all of the pieces together to identify a distressed property, get it renovated, rented, and then managing it for the long term is easier said than done. What our company has done is to put together a program for our investor clients, which is a hassle-free approach to real estate investing. Our investor clients are purchasing cash-flowing properties from day one, and they've got full-service property management so that their real estate investment is truly a passive investment. The real estate that our investor clients are purchasing are suburban properties for the first time really ever because of the drop in housing prices. You're able to purchase these properties where the rent rate provides an excellent return to the investor, and the investor's cost basis, what they have into the property, is substantially less than what it would cost to rebuild that property. The properties are 3 and 4 bedroom properties, 2 and 3 bathroom houses with garages, suburban neighborhoods, occupied neighborhoods in very stable areas with good demographics. Who we are, my company, like I said, is the Dominion Group. We're real estate investors. We've got over 500 rental properties, all single-family homes, and over the past 10 years we've done over 1,000 renovations to single-family properties. We've been in business since 2001. We employ 25 full-time staff and 80 dedicated subcontractors in the field who work for us. We buy, renovate, rent, hold, and sell residential real estate, and we're also a policy consultant to Baltimore Housing, which is one of the cities that we have offices in. We've been interviewed on a number of different media outlets, including American University Radio, Bloomberg News, and we were guest speakers at 2 real estate graduate class at the University of Baltimore, Merrick School of Business, and my alma mater at the University of Pennsylvania. Of course, we're a Better Business Bureau accredited business, and we were featured in Personal Real Estate Investor magazine a couple of months ago as one of the top companies in the United States who work in single-family real estate investment. Who you are and what you want. We think that you're looking to diversify out of the unstable stock market. You're interested in predictable current cash flow. You're looking to plan for either your children's college education or your own retirement. You're not interested in speculative investing, and certainly not speculative real estate investing. You're not interested in dealing with contractors, and you're not interested in dealing with tenants. What we're able to offer is a completely hands-off investment experience for our clients. It gives them the opportunity to capitalize on the foreclosure crisis and to participate in the housing recovery. The investment has current cash flow, and given the low cost basis versus the cost of rebuilding the property, we feel pretty strongly that there's a significant potential for appreciation in the value of the properties that they're purchasing. Something we'll get into when we go into the numbers, but the way that we've structured this, our investor clients are going to have the opportunity to own these properties free and clear in just 6 years. And I know that's hard to believe, but we'll get into the numbers and how we've structured this to make it work. But really, the root of it is in the price of the real estate versus the rent. The rental income is enough to pay down the property in a very short period of time. And most importantly, what we can offer is the most experienced investment and management team in single-family real estate, period. Getting into that, my claim there that you can own free and clear real estate in just 6 years, we'll get into that a little bit more specifically here. The program that we've set up has our investor clients investing $25,000 to $35,000 per property. Our lending company, our affiliated lending company, is providing non-recourse financing, so you could take a loan against your IRA. No personal guarantee is required to get the loan. Properties are rented from day one. The cash flow covers all of the expenses, and in addition, it builds up a reserve account to pay for turnovers and big repairs down the road. So when you come to the table with your $25,000 to $35,000, depending on the cost of the property, or depending on the price of the property. The idea is that you should never have to come out of pocket again. The cash flow from the property covers all of the expenses and builds up a reserve account to take care of any extraordinary event down the road, like a roof or a furnace. And you're going to own the property for roughly 50% of what it would cost to rebuild that property, which we think is pretty astounding. The investment profile here, these are recently renovated properties in stable working class neighborhoods. There's a substantial level of home ownership in these neighborhoods. We're not in bad demographic areas where people are moving out. The areas that we're in are experiencing population increases. The properties that our clients are purchasing often sold a few years ago for double the current price, what our investor has into the property. Like I said, they were recently renovated. There's a 12-month warranty on all the work that was performed, and a 12-month rental guarantee as well. And they're professionally managed in a landlord-friendly environment. And in one of the other videos, you can get into what our experience has been in the areas that we're working. All right, getting into the numbers. I'm a numbers guy. To break this down and get into how you could own the real estate in free and clear in just 6 years. This is a typical deal. Purchase price for the property is $58,500. There's going to be acquisition closing costs, which include title insurance, settlement costs for the title insurance, $1,000. If you get a loan, there's going to be a loan closing costs of just about $500, and so the investor's cost basis is going to be approximately $60,000. Get to capitalization rate in a minute. The loan amount, like I said, our finance company is going to lend $30,000 against that $60,000 cost basis. The interest rate is 6.9%, and the loan is fully amortizing, which means that it pays down completely in just 6 years. So our loan is $30,000. The investor's cost base is $60,000. So the investor needs to bring approximately $30,000 to the settlement table. The property that the investor is purchasing is already rented. Average monthly rental income is $850 a month. It's a very affordable payment for a 3-bedroom, 2-bathroom house with a yard and a garage. There's going to be the property management fee is $75 per month, which is very reasonable. And then we put in a pro forma of $50 a month for repairs and maintenance, $600 a year for property taxes. The mill rate in the areas we're working is about 1%. So a $60,000 property is going to have property taxes of $600 a year. And then you're going to need insurance as well. $35 a month is what we've been finding our carrier's been able to put a strong policy on these properties for us. So the property cash flow is $640 a month. So the principal and interest payment to pay down that $30,000 loan in just 6 years is $510 a month. So the property cash flow is more than enough to cover that principal and interest payment and get that loan paid off completely in just 6 years. The excess cash flow, we're suggesting that you set those funds aside into a reserve for events like turnover, to make the payment for a couple months when the property does go vacant at some point, if tenant leaves, to save up for a reserve for when the roof needs to be replaced down the road, when the furnace needs to be replaced down the road. It's wise to be conservative and set aside that excess cash flow into a reserve account for more extraordinary events. And so in this scenario, there's $130 a month of excess cash flow that'll build up in that reserve account for events like that. And so just from the property cash flow, the loan's going to be paid down completely in 6 years, and you'll own the property free and clear. And then that principal and interest payment of $510 will disappear, and the property cash flow of $640 a month will be able to go straight into your pocket. So the process, we think we've whittled it down to 6 easy steps. I'm sure that you've got some questions. We've tried to address as much as we could, but call call us with any additional questions that you have. From that point, you're going to choose which properties that you want to purchase. We move forward to sign a contract and a loan commitment. There's no loan pre-approval process. These are non-recourse loans, so your credit is not a part of the underwriting for us. We're really making a loan against the collateral of the real estate. Then we always suggest that you have a home inspection so that you feel comfortable that a third party has taken a look at the house and signed off that we've renovated it well. After the home inspection, after you're satisfied with the home inspection, we move to settlement. You sign the settlement documents and then begin collecting your rent checks and getting your management statements each month. So please take a look at the rest of the website, check out the other video on in the areas that we're working with and what our experience has been, and then fill out the form to start the process and get in touch with us so that we can help you to begin building your rental portfolio. Thanks very much.